So it's Adil bringing you a review of the FTSE 100 for Wednesday's analysis going into Thursday's trading, June the 25th, 2014. Okay, so strange day, strange week. Very hard to fathom exactly which way this bias is in the marketplace. I'll put my hands up. It is very hard this week, very tough. Last week was easy. I managed to get my nail around 310 points this week. What can I say? I just cannot get my head around it. Okay, so basically there's conflicting signals, conflicting bias changes, very sort of bias changes. Obviously today we've had quite a few with this economic data coming out. Okay, so let's see what's happening. Let's look at the fundamentals. Okay, fundamentals this week, as we all know, Mr. Carney's backtracked like Yellen's backtracked. Yellen mentioned a 6-month timetable, and this chap obviously mentioned that he was concerned about the housing market and that rates were going to rise, and he was trying to adjust expectations, and then he realised the damage that he'd done because the cable price of cable went above GBP USD. For those that don't understand, cable went above 1.7, and that was obviously hurting exports and certainly hampering any chances or any prospects of growth going forward, especially in terms of exports and reviving the British economy. So he realised obviously he had to do some damage control, so he came out today and stated that, or should we say yesterday, and stated that the comments that he made at the Mansion House, I think it was, were his own comments and not those reflecting that of the BOE or the central bank. So he was trying to disassociate those comments from the central bank. In other words, he was trying to be dovish, okay, and hence the reason why sterling has dropped below 1.7 and hasn't gone above ever since. So technically that was supposed to be supportive of the FTSE 100 going into today's trading, and given Mr. Carney's dovish comments. And as we all know, the FTSE's nosedived, and I was long today, so I got stopped out my FTSE long position at 6738. The market made a bottoming turn, and obviously it's reversed ever since. So certainly setting up for a long opportunity for me today. That's basically what I'll be looking for a potential long on this FTSE. Okay, so basically what do we have here? We've held a double bottom support. Okay, we did have some more economic data out of the UK today that wasn't spectacular. Let's just have a look. Okay, where is this economic data gone? Yep, UK CBI reported sales estimate was 23, came in at number 4. So that wasn't very good. Okay, so from a geopolitics perspective, the FTSE certainly should be off the hook now, although the MySex was down quite considerably today, minus 2%. So the Russian MySex certainly putting pressure on the FTSE 100 from that perspective. But having said that, the concerns have been alleviated because the situation in Iraq has certainly calmed down. Situation in Russia, Ukraine, especially with regards to this law that was revoked by Mr. Putin about him intervening and obviously going into Ukraine. So from a geopolitical perspective, the risk isn't there. From a socio-economic perspective, yes, we have got concerns with regards to the weak GDP in the US, although some more data came out with regards to the market PMI. That was much better than expected, so that certainly neutralized some of that bearish effect. Market US services PMI jumped to 61, composite PMI jumped to 61, so both came in much better. So it was mainly the GDP, and the GDP has been attributed to the NHS and etc. So and also a weaker GDP number certainly helps those that love the Kool-Aid. So obviously they want to buy stocks, expecting the markets to continue to move higher. That's basically where we are at. So with regards to the German market, obviously German consumer confidence rose, so that was certainly helping or underpinning the DAX itself. So there's a lot of conflicting signals. Like I said, Euro obviously is up to at 1.363. That's obviously hurting European stocks. So again, conflicting signals. So a lot of conflicting signals out there. And how do we interpret it? Well, with regards to the FTSE, given the fact that Mr. Carney is still dovish, therefore the FTSE still remains bullish. That's my perspective on things. Okay, although obviously global markets have forced the FTSE down, so Asian markets are down overnight. US markets obviously being under pressure with regards to a weaker GDP is obviously forcing the FTSE down, but inherently the FTSE itself is very strong, and it's certainly a buying opportunity from my perspective. Okay, even though I have just attempted to short the FTSE, just did not work out. It did go as low as 6715. It could have taken plus 20, but I expected it to hit the 200 MA, and it hasn't, and it's come back and traded above the double bottom. So that level is key support. So watch out for 6730 region, solid support. I expect that to hold and expect a potential bounce, unless, like I said, unless the US markets sell off en masse in the evening. So that's going to be an interesting take. It's all about the Kool-Aid. So will the S&P 500 hold the 1950 level and the Kool-Aid junkies keep buying, or will it flop and the Kool-Aid junkies run for cover? That's going to be very interesting. Okay. The FTSE 250 obviously coming into horizontal support. I expected, given the fact that the US markets have sold off and the selling momentum was still there, expected a continued move down. Obviously that didn't transpire. Okay, especially going into the 430 close. FTSE 350 held the 200 MA and certainly holding this trend line, so therefore we're looking for a potential bounce here as well. So there's two arguments for a bounce, folks. Okay, so two arguments from an intermarket analysis perspective, and obviously the FTSE 100 itself is certainly into potential support. Okay, so let's have a look at a 10-minute chart now. 10-minute chart broke this wedge pattern here, so let's just keep it. I'll keep that trend line in place for now. Okay, so you've got a gap fill that we have to focus on here. Let's just have a look. Okie dokie, here we go. So we've got this gap here, right? Okay, so focus on this gap here. Okay, so here we go. Okay, so here we go. Okay, so right, so basically just doing some analysis here, folks. Okay, so basically looking for a potential inverted head and shoulders pattern here. Just do some TA for you. Okay, so this is the pattern that I'm potentially expecting now, given the fact that this is based on the Kool-Aid. So weaker GDP in the US equals more prolonged Kool-Aid. QE junkies obviously getting excited, and the stock market makes recovers and bounces back. So given the fact that we've gone to here, creating a right shoulder now, reversal, close this gap. So technically you're looking at 6780. That's the target that we'll be looking for. 6780, folks. Okay, 6780. That's a target on the upside for the FTSE to close the gap and inverted head and shoulders. Now if you calculate the inverted head and shoulders pattern from 6715, that's the head, to the neckline at 6755. Let's just make it 6755 for easy for calculation's sake, and then obviously 6795, more or less bingo. Okay, more or less bingo, exactly where this gap level closes. Okay, and obviously 200 MA, and obviously this diagonal trend line that's going to come into play. So I'll get rid of this trend line for now, although it will be an interesting level when we do get there, because it may act as resistance, given that previous support equals resistance. And that's basically the pattern that I'm expecting to play out. So 6780, 6790 is going to be the target, based on the fact that the market is excited over this Kool-Aid. Okay, so let's have a look at a 60-minute chart. Okay, see if we can see anything there. 60-minute chart, as you can see, we've held pivot S3. We've put in a bottoming tail. Okay, so potential double bottom scenario here as well. So double bottom, bottoming tail, S3, all arguments for a potential bounce. Okay, and this is exactly what I teach on the live analysis service. It's just the fact that obviously I do quite a lot of trades, and I'm always trying to get around to sending out the analysis. Okay, so that's basically where we are at the moment. So that's my takes, folks. Okay, so obviously based on the fact that the US markets regain some steam, etc., etc., the Kool-Aid certainly takes precedence. Markets go higher. UK markets, European markets play catch up, and the FTSE goes higher and closes that gap at 6780 region. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye now.